Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. BTC breaking that 40K barrier as we reclaim this entire range from May 4th, 2022 with that Luna liquidation event. We are now back above the Luna liquidation event level, and we previously came above this point of control of this trading range here from 2022. So we are now back to levels above that 2022 region. Also at the 706 of this diagonal pitch fan, we had pricing since January. We are starting to make these projections come true. And let's go see how the liquidity lies. Shout out to everyone here. Let's go. Emery, CNC, APV, and MMA Mark. Let's go. So let's go into high block capital. What is high block capital? Well, people lock that liquidity into the charts to get burnt to a crisp for not using a stop loss. And we get to see what those crispy characters are. So let's do it now. Starting with the 1 minute time frame. So on the 1 minute time frame, let's load. We had the spike up to clear all the 25 Xers. We first have to switch it to max liquidity because that's what we're used to. I don't know why they switched it, but anyway, they have a burst up here. And remember, it is December 4th, False Move Monday. So these 100 Xers that bought into this profit, if they were not quick to take their profit, it V-shaped right into their liquidation points.
Fatality.
And then basically came down into the remaining ones that were hoping for higher amidst that. So don't be one of those breakout traders. Get your entry down at the bottom with some retracement ideas. And yeah, we were talking over the weekend, just to be clear, so we can delete that first and foremost. We were talking about the 15-minute time frame, so we're going to just go over that really quick, turn off our oscillators and go back to the liquidity. So we were talking about this super trend holding and or not, and then possibly having the super trend ride up here. And we basically broke this bearish super trend that started to form on the 15, and then we came back and retested the super trend level. So that would have been a clean entry zone here, and watching that candle close on the super trend could have been your idea here. And yeah, you also had the green dot alert to your phone down here to let you know on the dynamic alert system. So we'll come back to that in a minute, but first let's go back to the liquidity. Here we go. All right, so coming back down possibly to that 50x pool at 39,552 at $245 million, because they cleared all of the range of liquidity we were talking about. We were talking about on the higher time frame, so let's expand our vision to that now as we expand to the higher time frame pools. We're talking about in the 40k region, there's a clearing at that 40,500 mark. I mean, technically you could come all the way up to the 40,008 region, but coming back into the 50xers and the guys that are over leveraged is general practice and par for the course. If we go to the monthly time frame, you see these near double-digit pools at that 40k and possibly coming up to that 41k if it was so inclined. There is not that much in the immediate vicinity below, so we could be drifting up into that 40,500 while getting some order blocks off of the lower time frame 50x longs. And if you go to the 3-month here, we have a entire zone up to the 41,400 mark. After 41,400, it starts to taper. 40,800 has 28 billion on the 3-month, 20 billion at 41,000 even, 23 billion, sorry, I was saying thousand, 23 billion at 41.2 and 25 billion at 41.4. These are billions of dollars, so there's a lot of money to take for people who hedged their bets on the short playing out in this range, and now they're going to take that money, perhaps. After that point, do we see a retracement at some stage down into these lows to start to liquidate all of these? Do we see a September 7th, 2021 type scam wick down to these levels? I would not be surprised if that occurs at some point in the future. I've seen it happen, so it's especially when people get bullish. I will show you an example of that just to keep you on your toes. Let's do that now to get that out of the way. So if we go back in time, back in time to a time when BTC was doing something similar, coming up into some ranges here, and that was over here on September 7th. So let's go do something similar here and go back to that time. Okay, so we were making some progress here and we came back to a level. We're like, wow, we're breaking out, we're going higher out of the range, we're putting in some new highs, yay. And then El Salvador adopted Bitcoin as a currency, and everyone was encouraged to go buy Bitcoin. So everyone was going to buy Bitcoin, and then what happened? It quit in some bearish divergence, and I remember shorting the head on, or the right shoulder on that head and shoulders that started to play out. Here's the head. Wait, it was actually there was a head here. Here's the shoulder, head, and the shoulder, and I remember getting in on this right shoulder, and it did something like this. and then it went down to 42K from 52K, 10K in a few hours. So that is not out of the realm of possibility to go all the way down to 34K and liquidate all the longs once they reach a market objective. So keep yourselves, your stop losses into profit, and pay yourselves as you go, because you never know what may be on the horizon, and that may be a repeat on inbound as we reach into these levels. Don't keep pipe dreaming for upside, because it can go just down just as fast. All right, so I think we did justice for the time frames of liquidity. We have the math. We were talking about this impulse retrace idea on this daily time frame here. This insinuated if you held this 236 at 34,688 that you would be coming up to these levels. We came up to the 786, retraced down into an order block. We've been meandering around here for basically 19 days. We started to make our ascent from this 0.65 and reclaimed the 706 region at 37.8, and then we had this equilibrium bounce to this take profit zone at the 11382 level. This is your trend-based fib theory that I enjoy implementing, because it plays out time and time again by holding that 236 and going up. And as long as you hold that 236 level, you are keen for the green light to that profit target. That's why we had it there potentially, but we're always putting out theories for both sides. You cannot be one-sided in your viewpoint. So are we going to go to that 41K 1382 region? Mathematically, it is possibly inbound, and on the liquidity we went over just a moment ago how that is possibly inbound on this, where it starts to taper. So going up to these regions at 41.4 is where it starts to taper, but realistically you could not necessarily get all of that. Sometimes they leave some on the table, but yeah, that 41K taper spot could be where we look to see a slight retracement or a September 7th type deal. All right, let's turn on the Momo and see what's up with the chat. This is Momentum Master, link in the description for Mo. And you can go down to the features, toggle at your leisure, all that fun stuff. Stochastic array for those fatigue points, trend cloud, baselines, and your dynamic alerts to your phone. Can't deny that. And here we go. All right, so let's see. This daily time frame still pointing in this manner. What does that mean exactly? We'll find out. We are getting this cross up event of the baselines. Don't want to play against the baselines here. When the base price is above the baselines and the baselines are opened up in this manner, the momentum is in your favor to continue on this time frame. We're not getting some fatigue just yet. We canceled out that 3-day cross down event. We were talking about the possible cross down. It did not close in effect. You want to see it close with the cross down in effect. Until it closes with the cross down, it is not a cross down event. So we are still keen for upside on the 3-day, and this 3-day KD line possibly coming higher. We now just had a weekly candle close, which is extremely bullish, giving you a strong close with the money flow now even Steven with the RSI on the weekly time frame, and possibly drifting higher with the average of the Williams here. The stochastic RSI traders are clueless about what to look at, which is why you need more than just the stochastic. The Williams gives you those extra legs of steam when the stochastic is fizzling out or pinned to the ceiling here. So this Williams possibly coming higher for another week. Maybe this week will be sideways action, some sort of inducement trap / failure to increase higher. Who knows? Let's go into the monthly. I believe the monthly, well, we already went over the monthly last time. So the monthly candle starting out strong. This could easily turn into a rejection wick at one of these points midway through this candle on the monthly, so watch out for that. We have a 3% monthly wick of the super trend, so we need to negate this level over here on the monthly. This is a 41,359 super trend level. Can we negate the monthly bearish super trend that's been in effect since basically June of 2022 when we broke the bullish one? So can we flip to the other side and be in effect for putting possibly in higher highs? So that's the monthly super trend level. And if we go to the back to the daily super trend is rising alongside the price here, so we still have that in effect. I'm going to consolidate some lines. We saw that we bounced off the equilibrium here, so that's going to disappear. Actually, does it need to? It's kind of inconspicuous, so I'll leave it there. And the daily oscillator, getting that maximization of the stochastic RSI, the Williams now coming up to double top, and the money flow and the RSI not yet at overbought levels. The money flow coming slightly beneath the RSI, the volume tapering off here, possibly getting another surge on a lower time frame. Let's start making our descent, but overall overbought. If we look at the 22-hour time frame is getting the money flow. This is why I always talk about this, because it comes up time and time again. This disparity between the money flow and the RSI. Here's the money flow, here's the RSI. When you get this disparity gap between the money flow and the RSI, it insinuates an insertion of money coming in to meet the RSI. It happens time and time again. Conversely, when you get this money flow above the RSI, it starts to come down to the RSI. The RSI is harder to move than the money flow, which is why we overlay them like this. And I've noticed this disparity play out on multiple time frames. So this is something to note going into the future. The 22-hour money flow event does play out here. All right, so we're coming back to even Steven levels. It could go either way on the 22 now as we get overbought on that as well. The money flow above the 12-hour is above the RSI, so we're starting to see a fatigue idea set in for the 12-hour time frame. Does this start to play out? We are overbought on all oscillators as per the color-weighted background here, showing extreme overbought status on the 12-hour. 6-hour, also extreme overbought status on all the oscillators. Money flow above the RSI, starting to get that fatigue idea to set in. The leading MACD still crossing up and atom to the upside. Volume is tapering since this green vector candle. It's a drift into the shorts. 4-hour. 4-hour starting to come down here as we have a blue vector. Blue vector candles represent stop hunts, so it means it lacks volume to be a green vector. We have a green vector 1, 2, 3. We have 3 green vectors here, here, and here. So this one here is a blue vector candle, and in this kind of market maker theory, you have these 3 vectors plus the stop hunt. So do we see some sort of tapering effect and some downside at some point? Just something to think about, as you already had 3 vectors on the 4-hour time frame, and this last one being a blue is that theory for what PVSRA strategy is. If you're not familiar, please Google PVSRA strategy. That's what these vector candles represent. It is not solely Trader Realities. He just incorporates it. You can find out for yourself. You just go to Google PVSRA strategy. What is that? There you go. It analyzes price movements, volume, support, and resistance. Boom, boom, boom. There you go. And yeah, so you have, I love Trader's Reality though. He's a nice guy. Seems legit. So the hourly Hourly time frame starting to get this push up here. The cloud still pointing healthily to that 2 o'clock level, super trend holding, and our time frame getting overbought here as we have volume dropping off. So this could be inducing some longs to come back to that pool we were talking about here. There is some long getting induced to the tune of $41 million. So this guy is now trapped at 40,159, and they are now currently beneath that at 40,090. So they are in drawdown as they possibly come to this 100x pool, and their 50x brethren at 39,514. So we're going to put 39,514 on the chopping block here. 514 is about there. Let's just do 11. 511. So there is that 50x guy to come down to here, bounce off the cloud. Previously we have bounced, we didn't even come to the cloud or super trend yet. So if you're a super trend trader, you could have just been trading this super trend the whole time, moving your stop just beneath it. We also have a stop loss formula inbuilt to Momentum Master. If you're not familiar, it is there on A. You just have to go down to it, show trailing stop loss formula. It will tell you where the safe zones are, so you can avoid getting hit on whatever time frame you want, and it will tell you the stop volume level there. So you got some inbuilt calculators for stop loss, trailing stop loss ideas. And yeah, so if we go to here, the hourly time frame possibly resetting here with suppression on the 4, the 6, the 12, 22 daily. We are seeing false move Monday. This is the push up pre-market, and they might be inducing some people like this guy to go long because the Johnny come latelys enter the party late, and then they start to get gobbled up. Does it mean it's over? I have no idea, but we are imbalanced to the tune of 13.77 billion in long liquidity on the 1 minute time frame. So coming back to that 50x pool at 39.5 seems to make logical sense to me. Now the power of threes is where it's at, so you go to a lower time frame like the 15 minute here, and you start to build a narrative for hits to the high. So we had a hit here, and we had a hit here. And so what would it do? Well, it's gonna probably have a cross down event and then go up here and then go hit this guy. So you would basically see a cross down flash of a baseline here on the 15 minute. The 15 minute starts to dump. People are like, oh, it's dumping, short it, short it, short it. And then it will go and stop out those guys. And then that will be your key entry idea for a scalp to this zone here. And that is a potential reality that may occur. Not guaranteed. Do your own due diligence, of course, but that is what you would look at for the theory of the power of threes. You're like, what is the power of threes? The power of threes in trading. You could just Google it. The power of threes concept is a stage accumulation, manipulation, distribution. And there you go. You can look into it on your own. But it's a thing that happens over and over again. So you watch for these 3 hits to the high. The third is your confirmation. You don't want to take a second one, but if you're smart, you know you could scalp it and quickly get out and then look for that third hit. But yes, I digress. So we have to go into what we were looking at with ETH and Matic yesterday. Let's see if those things played out or not. So we were talking about, there's a deviation here. We were saying wait for a more conservative entry model here, but we got a nuke. It held the bearish super trend, came down beneath the cloud. What was this level that it was holding? If we go to a higher time frame here, it basically got that surge off the, what was that? Essentially, I think it would have been on a 5 minute then. there was no actual level other than the range that you were in here, just holding ultra bullishly on this range idea here. So it had nothing to do with the fibs per se, unless you were going to a shallow retrace zone. So it basically came into a 382, which is the shallow retrace. So it retraced shallowly as it was ultra bullish, and I was talking conservatively to come down to here for a possible re-entry, but there was no conservative re-entry. It was just ultra bullish above this level at the 382 at 2153. I don't play the shallow retrace game myself, so that is why we were not looking at that idea. But it did come down from where we were saying. We were seeing the nukes here, and it started to come down to a level you could have repositioned back in. And now we're getting some nukes on ETH. Does this insinuate how long does it lock in on these higher time frames? So with the nukes on the stochastic array, once again, how does the stochastic array work? Well, it's a never before seen formula that monitors 7 time frames of information with 32 plus indicator values, and it determines different fatigue points across the time frames. And now it's having an error loading for whatever reason. Give me a second to reload. So what it does is it'll appear in the moment no matter what. And then where does it lock in? So if you notice on this 4-hour time frame, a nuke locked in here on Friday, November 10th on ETH. And due to this being a blue vector and a nuke locking in on this time frame, it's like a rubber band that's overstretched. The elasticity was extremely strong because it closed on a 4-hour like that. So that symbol locking in was higher probability in my mind than, say, a 15-minute lock-in, because the 15-minute can flash a nuke and it doesn't really mean as much as a 4-hour closing with that overstretched elasticity level, if that makes any sense. So if you look at a higher time frame like the 6-hour, most likely the 6-hour locked it in too, making it a higher probability. So the higher the time frame that locks in the nuke, or the rocket for that matter, is the higher probability trade. And so while we are flashing on the 15-minute and it locked in on a 15, it immediately gave back and went bullish mode again. So it did that here too. It gave it back and went bullish again, gave it back, went bullish again. So in a bullish thing, you want to wait for this nuke to lock in on the higher time frames. The higher the time frame, the higher the confirmation of the exhaustion. Hopefully that makes sense, but you can see it in historical value playing out. Okay, so where do we go with ETH from here? If we go to a daily time frame here, go back in time to where we had this Luna liquidation event here, currently at this level where we expanded downward here in this order block zone. So we have some kind of wicks that came down into here. This is about a 50% level in this range here. So coming up into that 23, 28 region and seeing some possible reaction there. Let's go back to the moment in time we are at. So it's possible we are looking to get to a zone here where we go into these regions. The daily time frame on ETH is still curving in this manner here. We're waiting for this to see if it bursts up at a 2 o'clock angle. As it stands right now, it is not. Let's go ahead and take a look at the volume here. You got that green vector and starting to taper on the volume from this point. Going to the 12-hour time frame, the 12-hour had an inversion off the cloud. As you get above that cloud is a nice little burst above that cloud. This can be deleted now, but it ultimately still maintaining this angle, but we'll come back to it. And coming down below into the 6 hour. 6 hour had a vector and a vector, green vector 2 times, missing the third. So this third one could take us up higher. We got a blue vector. We have a vector here on the 4 hour, same as Bitcoin, vector here, and vector here. And then blue vector here, stopping volume. And yeah, once again, the same pattern, the power of threes. You would not just V-shaped, expect V-shaped and try to snipe tops like a boss. That's recipe for disaster. You wait for that third higher probability confirmation. Now there was a pool we were looking at down here, so we're leaving this guy alone. This is still on the chopping block per se, and most likely there are some pools inside here. So let's go ahead and take a look at Etherino. Where is Etherino here? Boom. Let's go see how the chat's going. Boom, boom, boom. Great show. Thank you, thank you. Bitcoin comments a bull market. My block is pretty high. Hi, what's up? We vibing. Nice. Booyah. So we go back to Ethereum. So Ethereum having very much the same idea here. Some V-shaped recovery on $143 million breakout trader longs.
Fatality.
And then it came down almost to the 50x brethren, bounced off some 100xers to come up into the shorts a little bit more, and possibly coming to that 2175 50x pool, although they're nearly at their break-even point, so they might exit at break-even scared out of that long idea. There is a 111 100x pool of shorts to reclaim up here in the 2220 region. So even though we are imbalanced to longs to the tune of 5.4 billion, there could be another stab up to these guys that sniped that short entry up there, especially the 100xers up at that pool by the looks of it on the 1 minute. But all of these candles, there's a huge pool down at 2131, and the brethren down here at 2111. Yeah, that entire range is mighty thick. At some point retracing down to that could be on the chopping block, and that is Ethereum. As we put in some locked in targets on the hourly time frame for some nukes, how does it play out going forward from here? I'd be looking for 4-hour time frames. I'd love to see more 4-hour time frames like this one lock in with a nuke intact. Then that would give me more sensibility about the market objective of the shorts being killed and fatigue on the longs coming back to fruition here. That would give me more confirmation, let's say, seeing this lock in the next 3 hours with the surge up here. If it came up to a level here, then it would probably do something similar to this in the past on November 10th. Let's go to Matic. Matic, USDT. Matic. So we're looking at Matic possibly coming up to a fair value gap here, saying that the angular momentum of this was stronger than Ethereum. It didn't necessarily perform like we were expecting to go. It did start to taper here as people trimmed on Matic, but it is looking like it could possibly do that again, just spaced out over time here. We tapped our head against the super trend on the hourly, broke it, and put our head up against the super trend of the bearish nature and held that. Now we're holding this cloud on the hourly time frame. How do you project where it's going? This is where you use trend-based fibs. Trend-based fibs use 3 clicks rather. Sorry, 1 second here. You use 3 clicks for the trend-based fibs. You can find them over here on your Fibonacci favorite trend-based fib extension. Click 3 times, like so. You do impulse and retrace ideas. Impulse, retrace. And within that, the math will project out into the future, and you need to have some settings on there. These are mine. You can extend the lines to the right ad infinitum like I do, and copy these settings by pausing the video at that point if you want to watch this back again. All right, so that's what I use. And then the 236 entry model. So what would you do here? Well, I would look at Matic and I would say, look, it had an impulse up to here to the bearish super trend, rejected off it, came down to here, but ultimately it's holding this 236 level at 8130. So it's holding the 236 and the cloud here on the hourly, which is projecting you to go to these levels, possibly to that fair value gap up here at the 1618 at 8479. Now you have some resistance things to watch out for, so you'd be watching out for these kind of consolidation here, and then if it rejects off of the 706 at 8249, then you set your stop into profit at below the 65 or something, and then if it boots you out by going lower in your face, so be it, it hits you into profit. But if it gets permission at the 706 level, it will surge up and you can just happily monitor your trade in profit. And that is what I have seen happen over and over again, with the 236 being honored on this impulse retrace trend-based fib idea. So that is what it looks like for Matic in this moment in time. Does it come up to that level of that fair value gap or not? That is the question, but it is holding the cloud, the baseline's in your favor, and the super trend is the only thing we need to flip here, but it did kind of a fake out flip. It still kind of maintained it, so I would consider it still on our side at this point. So yeah, you have the Momentum Master Trinity for approval to go, seal of approval to go up to that point. Let's come back to it in the future. So let's see what you guys want to look at. Great show as usual. Any thoughts on Matic? Boom, got you covered there, bud. So there you go. This is Matic. So holding the cloud, and the 236 is your negation point. If it starts closing candles beneath 8130, it is not bullish. This is what trend-based fibs are about. They're about continuation ideas. So if it negates that 236, then this impulse retrace is not projected to go to those regions. So it's a very mathematical, non-subjective, objective way to look at price action by seeing how the candles maintain the 236 or not. I don't remember where I got it. It was early in my journey when I figured out this tool, but I'm sharing it with you all free of charge. So please back test this and you'll find that it's deadly accurate. Like for example, if we do something here, watch this. Trend-based fib, here's an impulse up to here, retraces down to here, and then it ends up going to that 168 up here at 8178 to the wick, comes back down into an order block of the golden pocket region. But you see how, look at this. So we'll zoom in. It didn't have permission at the 706 here. Look, it butt its head against the 786, rejected, came below the 706, rejected, and the trap door opened, and boom, it came back down to the 236 exactly, and got the order block on that 236 to go up again. So it's down to the wick that it got that order block there at that 236. So the 236 will be your guide into the future for those projections into the future. That's the idea of, so retracements, difference between retracement and, so a retracement is about digging your way out of a trench. So this trench that we fell into here, if we just put the basics on, this is the trench, and this is the narrative to get out of the trench. The 236 out, up to the golden pocket 618, take profit, possibly get some money at the 382 and dig your way out of the grave with the retracement tool. So the retracement is about digging your way out of a trench. You fell down in, you're trying to get out. You're digging your way out. That's what a retracement is about. Now, the trend-based fibs are about looking to the right and projecting into the future based off of the strength and the intensity of the impulse wave, and then based off of the retracement wave here will give you your C kind of confirmation wave potential. So if you're looking at it like an A, a B, and a C wave, it'll give you this potential within that C leg up, and that's where it's strongest on the C wave. So you want to be using that as your C wave tool. So this is all fractal in nature, so that's why we're looking at it here. If we go down to the 5 minute, even on Matic here, there's an impulse retrace within this math here, right? So it's impulsed up to here, it came down to here, and then it's now holding that 236 and doing what we were talking about. And that's how you use trend-based fibs for momentum trading. So let's go back to Bitcoin and see if you have anything you want to look at. Wow, it's bursting up here at the seams, putting in a higher high, wicking into the higher high zone. So let's see what you guys have to ask for. Gem alert, Creo engine. MicroStrategy. I heard he likes to, I have not, but let's look at MicroStrategy. How's it going, by the way? MicroStrategy kind of making some higher highs here. Well, not within this trench that it's dug itself into. So we are right above this level. There is a wick here that we have yet to come into. The entire fair value gap range to the left here. What was that from? That was January 2022 when we were dumping out. So they were losing a lot of dinero on their investments. That's where the wick was. We have something here. $539.54. There's a slight fair value gap slash order block, bearish order block kind of idea over here. And let's go back to a higher time frame, turn this replay mode off, go back. So it looks like we are pushing our heads up to that level. Got a huge burst up here as BTC. I don't know why he doesn't trim, he just buys more BTC, but he must have his own strategy to it. I don't know what Sailor's deal is. It looks like we already wicked up into that level. So that fair value gap I was looking at, we didn't hit it quite yet. So there is a wick here on the 12-hour time frame that it looks like we are reclaiming and possibly hitting up into this region for MicroStrategy. So coming up to here and possibly coming lower at that stage. Who knows what will be happening. Coming to the hourly. And that seems like it could be we are recovering this wick over here on the hourly time frame and or reclaiming this fair value gap they front ran here. Okay, so that is MicroStrategy. Anything else? Is that a cup and handle? Looks like one. Where? On which you're talking about Matic before? So here's one. Yes, that would be kind of a cup and handle within a cup and handle, and the typical cup and handle is you have this rounded top at the top and this kind of thing. And one of the things that some people get cup and handles wrong about is that if it comes below a certain level, below 50% of the impulse, it's no longer a cup and handle. Don't let some cult of personality YouTuber tell you otherwise. They don't understand cup and handle, and they're feeding false information to their audience. This is, yes, your tip, but technically if you get into everything, this is your Adam and Eve double bottom. Okay, you could take this and do a, you know, cup and handle, round it out, look at the circular nature of it all and say, yes, this is a cup and handle. Patterns are basically traps, right? So if you look at my loading screen here, you'll see the dragon, and that dragon basically has the Adam and Eve double bottom, and that is your cup and handle, that's your W, that's whatever. And that's essentially this. So you get this V-shape drop. They grab the liquidity, they come up, they fake out the V-shaped people / kill all the shorts that shorted here in profit. Then they come back down and they round it out, and that's your Eve. And then that Adam and Eve double bottom kind of surges up to a point where it's like at the top of the range, and then it kind of bursts to the top of the range. We're not even at the end of it per se, so you would be up here where you would see a deeper retrace. That would be your handle. So this is like a little miniature one, yes. But yeah, I see all this stuff without actually drawing all the lines, and the volumetric cloud of Momentum Master has you at hello with these rounded out bottom ideas and seeing this super trend hold. So even if I were to zoom in on this here, you have that same pattern happening again, a W, and then you have that retrace, you know, whatever you want to call it, cup and handle, the baby dragon, you know, it doesn't matter what you name it, it's the same thing fractalized in time, lower time frame, higher time frame, it's all the same. So, but as you reach the premium levels, the probability plays out is less sure to play out. So you're at the extended play of the move. So the people who are long from down at the bottom are more likely to take their profits on their positions as you buy them. So the probability of a long playing out here is less likely than here, right? So after you've already seen the longs liquidated, this is where you'd be looking for a long, potential long idea down here. Up here, it's already exhausted the move. So for me personally, it's a lower probability trade, but within that lower probability, you have confirmation signals that make it higher probability, if that makes sense. Hopefully that made sense. I might have gone a little bit too fast, I'm not sure, but yeah, better to be fast than slow in this YouTube space, I think. So yeah, that's your typical cup and handle. But yeah, basically creating those rounded out bottoms, and then also creating that with the momentum of the volume here on the cloud is what we are looking at. Where does this butt its head and start coming, and then the shifting and the thinning of the cloud on Momentum Master. So this trend cloud, this is Bitcoin's actual bottom that we traced price action in with on Illustrator, and this shoulder, head and shoulder / cup and handle, whatever you want to call it, is just the schematic of what you see in all price action on all assets and what it looks like. And you start to make your way above this cloud, you close candles above the cloud, and then you trade with the cloud, and boom, you're going to the upside as the cloud thins. So as the cloud thins here on the 15 and you start making some candles closing above it, boom, you can trade that to the upside. So yeah, and then coming back down for an order block, if you set your stops into profit, the Matic came back down to the cloud and the super trend, and then we came back up here. So yeah, anyone else have anything they want to look at? I'm more than willing to take a stab in the dark about it. What's going on? Let's see. Where's all of this? Yeah, no problem. Just traveling a lot? Nice. Hope you're enjoying it, the holidays. So BTC still expanding upwards here. Cloud and super trend still on your side. Baselines from down here had you at hello from 5 a.m. my time yesterday. And we held that super trend to a T yesterday evening during the London session. Boom, came up, hit the order block, and we were gone. Whoa, what's that about? All right, so, well, ladies and gents, it is False Move Monday, so whatever they do to manipulate the price higher, do they start to fatigue out and have that power of 3 effect to come down to the lower time frame pools? If we go ahead and close this and close that and start looking at the liquidation levels to wrap it up in a nutshell for you. So we are going to take a look. It's in a book, A Reading Rainbow. As we go to this, you do have some, come on, stop switching to relative. Let's be maxed out. All right, so as we start to come up to the pools here at the top of the channel, this wick on BTC that wicked into 40,400, do they come and reclaim this 100x short pool at 40,417 or not? It looks like they already are on their path to do so. On the futures, they are on the spot trade, so the futures will not be far behind for this to get grabbed. But after they fade off of that to create a double top, do they create that 3 hits to the high idea we were talking about and start to make their way down into some of this liquidity on the longs? The tune is 14 billion in long liquidity waiting to be grabbed. But as long as the shorts keep shorting with 100x leverage and stuff, they have more fuel to just keep on their merry way drifting higher. Now, if we go to that monthly time frame to wrap it up, we're going to wrap up the monthly time frame. So the monthly time frame, we talked about having a, come on now, wait, what? I switched to the monthly, but it did not switch. What is going on? Max liquidity. All right, so the monthly time frame has basically liquidity on the monthly time frame to the tune, not double digits, but up to 41k and basically 41.5, but they're not double digit pools, so they could let it percolate on the shorts a little bit. They came back to nearly double digit pools here at 40,004, possibly trying to come to the 40,008/41k region to grab the rest of these shorts on the monthly. But beware, there are pools percolating below at some stage. On the 7-day, has the 40,850 region where it starts to taper slightly, so coming up into that region for Monday. Do we start to put in that higher high to that level? We're already starting to do it on the 5-minute. As we hold this cloud to that direction. So as you're putting in higher highs, you're not doing 3 hits/rejections to the high, so you have to wait for that. We're starting to get some vector volume on this 5-minute as volume starts to enter and do that stab up to that short pool we were just talking about, the 100xer at the wick. So also with this in mind, as people take their profits and trim, the USDT dominance is dropping to a lower range here as people enter their USDT into trades. So this double bottom idea is negated as they make another leg down on the USDT. So essentially the daily time frame cloud rejection inversion play of the USDT coming to lower regions. The next region is over here for that, and you're getting the cross down event of the baselines on the daily time frame that locked in on this daily candle close. So we could be seeing some USDT insertion into trades here, as this is a ABC to the downside. So we are seeing this as money coming into the market, as USDT dominance dropping equals people putting USDT into trades. Now, as we go talk about that rocket ship idea, yeah, we'd have to see some candles closing with some confidence and that cross up event on these 12-hour time frames and above for this to be realistic in nature. So it means that we are on, like Donkey Kong 4, upside plays. This is starting to come up here on this trend-based fib level for the Bitcoin dominance, going possibly higher. We are at the 706 trap door. Do we get permission granted to go even higher? If it goes higher, then Bitcoin's getting a surge up even further as this dominance continues to the upside. We were looking at this insinuation bounce off the cloud here for Bitcoin dominance, rising since back then in November. So enjoy the ride. If you're in the long, congratulations, enjoy it and set your stops accordingly. And look for potential retracement at London time. Let's go look at one last time for the Forex Factory news. What do we have in the pipeline? We have CPI data in 4:30 my time. So basically in about less than 12 hours, we have about 8 hours from now. CPI, and that should be coming in the orange folder as well. So we'll see how that plays out. Well, ladies and gents, beware and be aware of your trades in profit. Always remember to pay yourselves. And yeah, how far can we go? We already went up to that level that we were talking about. Zooming out to the time frame, once again, we have this 41K region that we could come up to and then potentially fade off of that. So there is no insinuation of downside just yet. You have to wait for those 3 hits to the high confirmation if you're smart, and there is no abatement in sight. Basically, the pools of longs that are building are saying at some point they will retrace. We did just get a insertion of some longs here. As we reclaim this 100x pool, they got the $152 million character there.
Fatality.
And as they do that, they just induced some more longs. So this could be your double top potential idea. So beware of the long idea. They are inducing some longs, more longs than shorts are being induced here, which generally means more drag in that direction. So watch out for potentially coming lower at some point soon. Could be coming down to this point at 39,500 at some stage. Where is that stage going to be? I don't know. But that is what it's saying based on what they're inducing here. 72 million at that 39.66 and their partner in crime at 39.552. 14 billion imbalance. Well, ladies and gents, I must be on my way, so I appreciate your time. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you on the flip side. Peace.